keep in mind is that Bitcoin is not competing with the dollar. It's competing with international real estate, global equities, expensive money managers on Wall Street, and any long-range investment that somebody makes. And so right now we're about $2 trillion in Bitcoin. It's going to 20 trillion, then it's going to 200 trillion, then it's growing 20% a year. And that capital is coming from overseas. It's coming from China, from Russia, from Europe, from Africa, from Asia, from the 20th century to the 21st century. So what's compelling about it is if the United States takes a position in the emerging crypto economy, if it buys up 10, 20% of the Bitcoin network, we're going to pay off the national debt. And so why wouldn't that be in the interest of the United States?
Bitcoin is at the center of a major financial transformation, with two influential figures making bold predictions about its future. Michael Saylor, the CEO of MicroStrategy and a leading Bitcoin advocate, along with Tomlee, co-founder of Fundstrat Global Advisors and a respected cryptocurrency analyst, foresee an extraordinary trajectory for the digital asset. Saylor emphasizes that Bitcoin, currently valued at around $2 trillion, has the potential to reach a staggering market capitalization of $20 trillion and even $200 trillion, growing at an impressive rate of 20% annually. He highlights that capital fueling this surge is flowing in from all corners of the globe, including China, Russia, Africa, and Europe. According to Saylor, if the United States were to capture just 10 to 20% of Bitcoin's network, it could significantly reduce national debt, transforming Bitcoin into a strategic financial asset rather than just an investment. Tomlee, known for his deep market insights and crypto expertise, points out that Bitcoin's biggest rallies often happen in short, intense bursts. He cautions against trying to time the market, as this could mean missing out on substantial gains. Despite Bitcoin recently dipping below $80,000, Lee remains confident that it is on track to exceed $150,000 this year, marking a strong recovery and setting the stage for another explosive bull run. We'll now dive into insights from Michael Saylor and Tom Lee's latest discussion. But before we do, take a moment to like this video, subscribe to the channel, and turn on notifications for more in-depth crypto content. Thanks for being here. Let's get started.
Were you surprised that in the announcement over the weekend, the president mentioned other smaller coins like XRP, Solana, and Cardano, as well as Bitcoin for the Strategic Crypto Fund?
I'm not surprised. I mean, I think there's no way to interpret this other than this is bullish for Bitcoin and is bullish for the entire U.S. crypto industry. You know, there are conservatives that view the right path forward as just a Bitcoin-only policy because Bitcoin is a commodity, an asset without an issuer, a neutral asset, and there's no controversy. But the president's adopted a more liberal economic policy, and that's his right. He's president of the United States. That the best thing for the country is to move forward with an enlightened, progressive policy toward digital assets. I think it's worth $100 trillion to the United States, and ultimately there's four different assets that people need to come to grips with. A digital commodity like Bitcoin, an asset without an issuer, backed by digital power. A digital currency like a stable coin, backed by a fiat currency equivalent. A digital security, an asset with an issuer backed by a stock or a bond, so we can tokenize Wall Street. And then a digital token, which is an asset with an issuer that's backed by digital utility. I think everybody's trying to come to grips with that taxonomy, and as the market gets more educated, we're going to see more progressive, constructive policy engagement. The key to keep in mind is that Bitcoin is not competing with the dollar. It's competing with international real estate, global equities, expensive money managers on Wall Street, and any long-range investment that somebody makes. And so right now we're about $2 trillion in Bitcoin. It's going to 20 trillion, then it's going to 200 trillion, then it's growing 20% a year. And that capital is coming from overseas. It's coming from China, from Russia, from Europe, from Africa, from Asia, from the 20th century to the 21st century. So what's compelling about it is if the United States takes a position in the emerging crypto economy, if it buys up 10, 20% of the Bitcoin network, we're going to pay off the national debt. And so why wouldn't that be in the interest of the United States? I don't think anybody's ever lost money in the Bitcoin network holding 4 years. The United States' best investments are Alaska, Mexico, California, and Louisiana. And Manhattan. We're still holding them hundreds of years later. It's a nation state. So presumably, you want to buy Bitcoin, you want to hold it for 100 years. You know where the future's going. The AIs, the foreigners, the Europeans, the 20th century capitalists, they're all going to cyberspace. And so the United States has the ability to buy this for a nickel and pay off the national debt. It'll be the greatest economic program of the 21st century for this country. Bitcoin's not highly speculative to the 500 million people in the crypto economy. It's the best performing asset in the past 15 years, and generally the best performing asset every single year. My company's gone from a $250 million investment to almost a $50 billion position in 48 months. So clearly, there's enormous economic energy in this asset. It is probably the most certain thing in the financial universe if you have a long time horizon. The reason that there's so much support for a commodity like Bitcoin is it is an asset without an issuer. No entity controls it, no entity runs the network, no entity can change the protocol, no entity has enough power to impact the market trading of that protocol. That's actually why most of the focus is on the digital commodity. And that's what makes Bitcoin special. Satoshi was the insider. He left 1 million Bitcoin for all of humanity.
Do you think that any other asset should be in the strategic crypto reserve?
You know, I think if you're looking out over the next 100 years, trying to figure out how do you capitalize a nation state or a country, what you want is a digital commodity. But if you have a sovereign wealth fund, then I think it's well within the rights of the leader of the nation to decide to put, you know, proprietary assets, securities, tokens, and the like into it. And of course, the decision will eventually be made through a fairly comprehensive political process over the next 6 months. We have till July 22nd when the digital assets framework and recommendations from the executive order are due on the president's desk. It should be interesting to watch what happens between now and then.
Bitcoin is far more than just another form of currency. It stands as the ultimate digital asset, offering unmatched security and long-term potential. As global capital continues flowing into the crypto market, Saylor argues that the US must take decisive action. He believes that integrating Bitcoin into the national financial strategy could not only help reduce the country's debt, but also cement America's economic leadership in the 21st century. Meanwhile, Tomlee is closely analyzing shifts in the broader financial market. While AI-related stocks, including Nvidia, have taken a temporary pause, he sees this as part of a natural market cycle rather than a downturn. With strong ongoing investments in artificial intelligence, particularly in financial and mid-cap sectors, Lee predicts another rally is just around the corner. Regarding Bitcoin, Lee maintains that the current dip is simply part of its typical price cycle, not an indication of long-term weakness. With major institutional players like Citadel stepping into the crypto space, institutional adoption is accelerating. Given these factors, Lee remains confident that Bitcoin will cross the $150,000 mark by year's end. The key question is, are investors prepared to seize this opportunity? Now, let's explore more insights from their conversation.
You said choppy. You said exactly this. You said choppy for how long, but then the S&P again starts moving. And this is not, I don't think, an obvious or a logical conclusion to have right now with all the bad news that we're hearing about these policies. Everybody thinks the market's headed lower.
Yes, but instead we could be bottoming, maybe this week.
And this is the choppiness you were talking about. And, you know, I think you use a combination of fundamentals and technicals, obviously,
yes,
to get things right. And the reason for the choppiness was going to be the first 100 days of this fire hose of executive orders and everything else.
Yeah, that's right. It's kind of weighing on investors' minds. We're seeing it even in the surveys and CEOs because the tariffs and Doge are, you know, the Doge is creating austerity. Tariffs are creating uncertainty. Businesses are maybe sort of sitting on their hands. This is why I think markets have been sort of sinking and momentum has done so poorly. But to me, Friday was a good day because, you know, it was a bad news headline, but markets actually rallied.
So from here on out, you think we bottomed? Have we seen the lows already? Because we didn't get worse than, what do we get, 5% on the S&P as far as the drawdown?
Well, I think investors are going to be kind of watching out of the corner of their eye, because Friday is the jobs report. Last week, consumption kind of raised concerns that maybe we're slipping into a slower or downshift in speed. So if the jobs report's really weak, there could be some panic.
What is the fundamental and the technical backdrop for bottoming happening this coming week?
Well, I think the best way to define a bottom, and Tom DeMark has mentioned this before, is stocks rise on bad news. And so Friday was maybe the first sign of bad news, the market's bottoming, but I know our technician, Mark Newton, doesn't think we're there yet. He wants to see more signs of exhaustion, but we've seen sentiment turn negative. So maybe Friday, but it could have already bottomed too.
Outlooks, how about the AI trade? I mean, we've certainly seen signs of weakening, some skepticism there, especially surrounding NVIDIA, which hasn't filled in that pre-DeepSeek gap that it created. Where does that stand? How important is that for this next move forward for the bottoming process?
I think technology is still important for the next few years. In our sector weightings this year, it's number 3. So financials, industrials, first and second. But I think it's just digesting a lot of the prodigious gains the last 2 years. But I don't think AI spending is really going to weaken. I know investors have a lot of good news baked in.
So I think the market, if it does resume a move higher, you think it's the same leadership, or there has been some rotation away from some of the Mag 7, and financials have looked strong. Will it look different, or will the winners come back with a vengeance?
Yeah, in January, the first, let's say, five weeks or so, that leadership was different because it was a lot more tech outside of the Mag 7, and it was financials, and it was some mid and small caps. I think once we're through this rough patch, that's the kind of leadership we think will.
I don't know why we told you people you were going to talk about Bitcoin, but now that we did, you do need to talk about it. It's come back a little bit. What did you attribute the move down below 80 to? Just that it's Bitcoin? What do you want?
Yes. I would say what's interesting is Bitcoin's not had negative headlines in February, but it was down. But I know our technician, Mark Newton, had talked about this being a cyclical downturn in Bitcoin through the end of March. So he was talking mid-January, getting down to 62. The weekend...
105 to 62. That's just Bitcoin.
Yeah, it's a typical...
Do the math, though. It's like, in a month, 105 to 62?
Yeah, that's a test of the resolve
that
of
hurts
bulls, right?
people that buy at 105.
Yeah, but as you know, Bitcoin makes all of its gains in 10 days. So if people sort of try to time this, they're going to miss out on a chance for Bitcoin to go back to its highs.
And by the end, at some point in this year, you think it gets, because last year you thought it might get to 150 or even higher, right?
Yeah, I think it's going to do better than 150 this year because it's becoming more widely held.
Yeah.
If Citadel starts trading it, it starts to have more broad acceptance.
Okay.
Bitcoin's remarkable rally continues, recently pushing past the $90,000 threshold despite market fluctuations. After briefly dipping below $83,000 following geopolitical developments, Bitcoin rebounded strongly, reaffirming its status as one of the most resilient assets in the global financial system. Both Michael Saylor and Tomlee emphasize that Bitcoin is not just another speculative investment, it represents the future of digital wealth. Saylor has long argued that Bitcoin is competing with traditional assets like real estate, equities, and bonds. With a current market cap of around $2 trillion and an annual growth rate of 20%, he sees Bitcoin's potential market size reaching $200 trillion, fueled by capital inflows from global markets, including China, Russia, and Europe. Meanwhile, Tomlee remains steadfast in his bullish outlook. He stresses that Bitcoin's biggest gains happen within a small window of time, making market timing nearly impossible. Despite short-term volatility, his prediction of Bitcoin reaching $150,000 by the end of the year remains unchanged. The growing presence of institutional investors such as Citadel and other major financial firms continues to validate Bitcoin's role as a core financial asset. Even geopolitical instability, which previously triggered sell-offs, now serves as a catalyst for Bitcoin's continued growth. The real question isn't whether Bitcoin will maintain its momentum, it's whether investors recognize the opportunity before it's too late. As Bitcoin inches closer to 6 figures, the market stands at a pivotal moment. Saylor sees it as a safeguard against weaknesses in traditional finance, while Lee views it as a revolutionary force reshaping the global economy. The financial revolution is already unfolding. Are you ready for the ride? What are your thoughts on Bitcoin's recovery beyond $90,000? Does this signify its increasing resilience? Share your perspective in the comments below. Don't forget to like this video, subscribe to the channel, and enable notifications to stay updated on the latest crypto insights. Thanks for watching, and we'll see you in the next video.